Hello from Trend Signal for our review of the data and events the week beginning the 16th of January. Let's have a quick review of what happened last week. The FTSE was probably one of the stronger markets last week, courtesy of sterling's fall, up 58 points or 1.5%. The Dow and S&P both off only marginally, 78 points on the Dow, 2.5 points on the S&P, really down to concerns over Trump's business strategy and whether the Trump effect really will happen. The DAX marginally higher, up 30 points, about 0.25%. But the one market that suffered more was the Nikkei, down 167 points or 0.86%, down to the strength in the yen as the dollar gave up ground Thursday, Friday. The euro was also stronger against the dollar last week, up 110 points I've got here, just over 1%. Sterling continues to fall. I know we've fallen sharply over Sunday night. I'll get onto that in a second, but down 88 points last week, which is 0.75%. And to underline the strength in the yen, last week dollar yen down 248 points, so that's down 2.1%, the dollar versus the yen, so the yen firming sharply there. Gold, well, not surprisingly, with gold giving up over the ground, it got another kick, but I think the geopolitical risks are part of the reason why gold's rallied up $25 last week, 2%. Oil just succumbing a little bit to profit-taking post the OPEC cuts, etc., but down $1.26 last week, which is 2.25%. So on Monday morning, I should say, soft Far East markets overnight, with the Nikkei and the Hang Seng both off around 1%. Dollar index up marginally due to sterling's fall, which I'll talk about in a second. But we start the week with a federal holiday in the United States. Just looking at the calendar here, there we've got the bank holiday in the US in observance of Martin Luther King Day. So the markets will be shut in the US, so we expect a slightly slower day Monday. Sterling's big fall. I say big fall. It's a notable fall going into the levels last touched on the 7th of October when we had the sterling flash crash on that Friday, if you recall. But I think it looks like sterling has fallen, following comments from certainly Theresa May or voices from the government as well, notably Philip Hammond as well, suggesting that the UK could pursue a harder rather than a soft exit from the European Union. I think Theresa May on Tuesday is going to reveal her blueprint for Brexit negotiations, but I think the noises coming out of various government sources suggest that it's going to be more hard-boiled variety, I suspect. There was an interview on Monday morning with a chap called Gerald Lyons, who's make sure I get this right, I think chief economist from the Centre-Right Policy Exchange think tank. He suggested removing ourselves from the single market and customs area would bring as many benefits as costs. And Mr. Hammond over the weekend, our Chancellor, I have to remind people about the name of our Chancellor. He's very much a shadow man, or has been since been appointed. Maybe we'll hear more of him. Philip Hammond also mentioned that the UK would seek to undercut the EU on taxes if it was not granted good access to the single market. Well, that's something he's got up his sleeve. Obviously, that's not something we can do whilst a member, but it'd be the first act we could take, I guess, if we were forced to walk away. Sterling fell, well, if we've got all these aces up our sleeve, why did it fall, I suppose you might ask. But it's still not going to be easy. I think in the short to medium term, there are loads of uncertainties. And let's face it, investor confidence is key, which definitely won't be helped by the hard Brexit talk. Theresa May's speech on Tuesday will probably not put too much detail out there, really, certainly any more than we already know. And a number of brokers are now targeting 115. I know Bank of America and Merrill Lynch has talked about 115 in the first half of this year. Certainly there's been a jump in what's called the one-week implied volatility, which suggests there are more falls to come. Not all doom and gloom, though. Mr. Gerald Lyons thinks sterling was overvalued going into Brexit, and like many markets that have a sudden sustained move, the move can be overdone, a bit like a pendulum. If you consider the pendulum being up the top of one side when sterling was overvalued, as it swung down, as sterling weakened, it tends to swing past its fair value, and I think that's probably the position we're in at the moment, and I can't see any respite for it in the short term. So, and also we had an amusing interview with Donald Trump conducted by Michael Gove for the White Times, which was interesting and slightly amusing, as things can be with Trump. But I think Michael Gove saying yes as eagerly as he did, he just sounded like a bizarre, eager puppy keen to please. Just sounded so very, very odd. But Trump did underline his support for the UK and its Brexit move, and I think that's obviously partly in support of the UK, obviously, but it seems like it's another dig at Mr. Obama in his last 4 days of his presidency. Okay, so data and events this week. There's a lot happening. Let's get on to it. We've already talked about the holiday this evening. That's Monday evening. We got Mr. Mark Carney from the Governor of the Bank of England talking at the London School of Economics. Policy issues affecting the Bank of England. That's a pretty broad-reaching topic. If the markets were open, they would obviously be following that, but it's at 6:30 in the evening. Tuesday morning we have UK inflation data. 1.4% is what's expected. That's another jump there as the effects of the 20% fall in sterling continue to take effect there. Wednesday we have UK unemployment. I haven't got any comments on that really. 1:30 in the afternoon we've got the US's inflation data, CPI, very benign. It's the core one, in fact, so that we should be looking at plus 0.2%, very benign. Obviously, the dollar is riding high, which keeps prices well in check. Janet Yellen, she of the chairperson of the Federal Reserve, the US Central Bank, the goals of monetary policy and how we pursue them. So these central bankers are all talking about very broad-reaching subjects and fundamental subjects as well. Anyway, that's on 8 o'clock on Wednesday evening. Thursday, normally it would be a very important day with the European Central Bank monthly policy meeting, monthly monetary policy meeting, where we would expect to see plenty of chatter and speculation about rates and QE and all that sort of stuff, but none of it. We're not expecting anything. In fact, the markets are expecting Mario Draghi to say absolutely nothing, or at least that's what they hope he says. And I think the debate about whether the ECB is tapering QE or extending it, I think it's fairly clear they're extending it. I'm not sure why people think they're tapering it. Yes, he's tapering it from 80 to 60, but he's extending it by another 6 months, which in terms of his aggregate value obviously amounts to more QE. Unless I'm totally mistaken. Philly Fed Manufacturing Index, the Philadelphia region, a very important manufacturing area, looking for quite a bit of a softer number from the previous month, but that data is out at 1:30 as well. Then we jump to Friday. Again, Yellen speaking again, but the main event, although it's not on this list, rather bizarrely, is the inauguration of Donald Trump as the 45th President of the United States. You have to keep on repeating that to let it sink in. It's extraordinary. Yes, Donald Trump, the 45th President of the United States. Incredible. We do have some other data out, retail sales in the UK, but I suspect we might have a slightly stronger number than minus 0.1%. It seems the Christmas data, sales data were quite good. Maybe that's factored in, but we'll see. 9:30, I should say, on Friday. That's it. Thank you very much for listening. All the best. Bye for now.
If you would like more information about trading the right way, Trend Signal is giving you the opportunity to see and hear about its services live at a free online seminar. Take a look at the Trend Signal website for the latest events and to book your free place.